Hello everyone and welcome to Desi Investing, a channel dedicated to investing in the Indian context. In today's video, we're going to take a look at RSI and how we can use it in our trading and selling. I've referred to RSI in my earlier videos and will be using it in future videos as well. This is something that I've been actually actively using while filtering stocks, and it's a really helpful indicator. Let's dive in and look at RSI. By definition, RSI stands for Relative Strength Index. It's a momentum indicator, which means it's not a ratio like PE value that is built inside the stock, but rather deals with what's going on with the stock in the market. By formula, RSI is given by 100 minus 100 by 1 plus RS. Again, RS is average gain of up periods during the time and average loss of down periods during the time. Time frame here is generally taken as 14 days. Alright, don't worry, the definition might look complex, but first of all, it's not complex, and second of all, we don't need to understand the definition per se, we only need to worry about the values. Interpretation of RSI is as follows. Like I said, it's just a ratio and therefore does not have a unit of measurement. It can vary from 0 to 100 theoretically. Let's have a look at a small calculation. Let's say a stock gains 5% on a few days and loses 5% on a few days and remains flat the other days. And this is a time frame of 14 days. So putting the formula out and substituting for gain equal to loss, which gives an RS of 1. So substituting these values in the formula, we get an RSI of 50, which indicates that the stock is flat and hasn't moved much. RSI ranges and inference. RSI cannot be used as a standalone measure. By that, I mean you also have to take into account what the news about the stock is, what the 52-week high or low, etc. are. It even makes sense only when the values are too high or too low. Below 30 means that it is oversold and above 70 means that it is overbought. Let's have a look at the example on the screen. The graph on top, which is a candlestick chart, shows how the stock has moved, and the line below shows how the RSI has moved. The quicker the stock falls, the lower the RSI, and the faster the stock rises, the higher the RSI. So it's not just about how much the stock moves, but it's also about how quickly the stock moves. Let's see how we can use RSI to make stock trading or option trading decisions. If the RSI is below 20, it means that the stock has been deeply oversold. Your best bet here is to check why it is so low, such as a news article or a bad debt or bad management, etc. Unless it's a BSE 30 company or a Nifty 50 company, I'd recommend to keep away from this for some time. Second, if a stock crosses 30 from 20 levels, then it means that the stock was oversold and is now recovering. You can buy the stock or sell a PE or buy a CE. In all cases, we are assuming that the stock will go higher. If it is below 30, it means that it is oversold, and you can do the same thing as above after checking why the stock lost a lot of money. If it is between 30 and 70, it's just the usual trading patterns and there's nothing much that you can do with it specifically. If it is above 70, that means the stock is overbought, and if you own the stock, sell it as it is likely to correct and you can probably buy it at lower levels. If the stock has crossed below 70 from 80 levels, then it means that the stock was highly overbought and is correcting now, and you can sell the stock or sell a CE or buy a PE. In both these cases, we are assuming that the stock will go down. If the RSI is at 80 or more, then it means that it was highly overbought. It could be due to a lot of reasons, such as good news, maybe the company saying that it will repurchase the stock, there could be an impending dividend announcement, etc. It is very likely to correct itself and go down. A lot of people buy stocks when it is literally at its peak, and an RSI of 80 or above shows that it is actually at its peak. Don't buy the stock at this point of time. RSI, a word of caution. Like I said earlier, it doesn't make much sense to see RSI standalone. It is a momentum indicator and it is also a mood indicator. It shows what the sentiment about the stock is in the market at the current time. It reflects the past and is not a true indicator of the future. I'll put up a couple of links in the description below where you can check for stocks. and for indices like the Nifty or the Bank Nifty, etc. And these are the ones that I generally use. Let's stop here, even though RSI deserves a couple of videos more at least. Please like, share, subscribe, and most importantly, please comment so that I can make the next videos accordingly. Thanks for watching.